In this part, we will talk about some more advanced trading tactics to use alongside with the Oracle signals to help you make the best trading decisions. Let's dive in. So in this area, if you remember from the last video, is where we ended our recording, roughly right around this sideways range. As you can see, exactly as I'd explained in part 2, the discount zones, the price did retrace about halfway, almost 3/4 of the way of where the candle printed on the 24-minute time frame before it went up to the upside. You could have had a move of 8%, 8.5% in your favor. That is why the discount zones are very important for us, because they help you get a better entry and help you to squeeze a little more out of each trade. With that being said, let's look at some of these other prints that we had off this coin and just do a little bit of a technical analysis utilizing some of our other indicators. So in this particular case, we'll just try and look for the ultimate low here and then start our way. So here we go. So we've got this, let's say these two low points is the ultimate low. That brings us back to November. Okay, the price came all the way down, and alongside while it was down, we got a lot of prints. So let's say that we have now identified that this bottom area, because of this bounce, and definitely on the second bounce and third and fourth bounce, let's just call this area support area. So I would usually have templates and I would mark this as a long area. And also we can see clearly here that we've had a lot of taps off the top over here. So we kind of have a range. Now, my ranges when I trade personally can be super tight, but in this demonstration, I'm just gonna make it very simple for everyone to understand. We got an area up here for shorting, and we got an area down here for longing. It's purely based off of the amount of taps and rejections off of certain areas. So let's say by this area right here, the user, being you, could have identified a very nice range. Even if you could even extend this out further and say the rejection was here, from here we got a bounce, from here we got a rejection, and so on and so forth. And so we have a clear range to play with. Actually, look at this. There was a rejection here before we broke through. We took a lot of volume to break through there. So once you've identified a top and a bottom, typically what I look for on a lower time frame, I look for a bare minimum of 2 taps. So I would be looking for 2 taps off the top, 2 taps off the bottom. In this case, we've already got it here, 2 taps off the top, 2 taps off the bottom. But because I saw 1, 2, 3, I've already identified that this is becoming more of a rejection area. So with that being said, what do I do next? So I'm waiting, my alert goes off, I get the Oracle print. I look down here, we're going to look at this one specifically right now, and we are going to look at what Morpheus at the time and Dozer at the time were saying. We're going to start with Dozer. We're going to work our way from the bottom to the top. So first we get the Oracle print, we get the notification. The next thing we're going to look at is what happened over here. So the price, if you look, this is a high and this is a low point. Whereas on the price action, this is a high and this is a higher high. That is a divergence on Dozer. In addition, over here, we've got a high on momentum, and then we've got lower high on momentum, but on the actual price action, we've got a higher high. Again, creating a divergence. A bearish divergence formed in the rejection zone above the 21 EMA, which is a very important level to use on the 24-minute time frame. We are now breaking through that level. You get this Oracle print. You know the price is technically going to be working its way down to the 200 EMA. That's what usually happens. It works its way down to the 200 EMA. You look over here, you've got a trigger wave. You see that money flow at the time was curving a little bit. Let's open that right up and check. So right over here, at the time of this print, money flow was going to the downside. You can see right over here, it was going to the downside. So, and if you look at previous areas of money flow, you could see that this is pretty much the high for money flow. It doesn't go all the way up to here. Typically, there's an area where the money flow starts to reverse on the 24-minute time frame. You then look at Dozer has gone to the top, it's on its way down, it's hit the top area, which are the areas we look for better areas to take a short, and down here better areas to take a long. In addition to that, we've had Divergence is building up on Morpheus. We've even got the divergence notification. We got a trigger wave. The price is in our resistance area. There you have a perfect trade setup. The only thing left to do at that time is to zoom right in. And now that we've identified that, we don't need to look, and we need to say, okay, we've got this print. How can we maximize this print? So for that, you're just going to take your fib tool that we've created called the discount zones, and you're going to decide which style of trading you're going to use from the options that you have for the discount zone, and where you want to place your entries. So if you went with one of the ways was to enter here just when you get the print and put another order up here and the third order up here. I personally, when I do this, I like to look for some form of a retrace before I enter, as opposed to just rushing into an entry, especially on the 24-minute time frame. So I would say confidently that had I been trading this, my entry would definitely not been anything lower than right here, which is the center point, which is at $10.44. So that's my entry, $10.44. And now what I need to decide is where I put my stop loss. So your stop loss, the reason that these trades look phenomenal and they work so much better than just taking a random print of a long or a short, is because we have a range, and this is the high of the range. So in theory, you either would take the previous high right here or this high, and you would put your stop loss above it. Well, because the distance between this high and this high are so close to one another, I have no problem to use this high. So there we go. And down here, this is going to be our entry. So we've identified our entry, we've identified our stop loss. So now what you would do is utilizing a bare minimum of a 2-to-1 trade. That's what we're looking for. You could look for a full rotation back down to this green area, or you could look for a 2-to-1 and just get in and out of trades, which is something I highly recommend if you're new to trading. If you've been trading for some time, then you could take profits on the way down and identify other areas of resistance and support, and you could continue to ride that wave. Let's say that our entry is here. We're going to put a stop loss above here. That's our stop loss. So now this number here, 1.65, needs to read at least 2 before we close our trade fully. That's the goal here. Now, one thing I'm going to throw out there for you is that you always want to pay the trader. If you as a trader decide to fully close your trade at the 200 EMA, that's normal and that's fine, and there's nothing wrong with that. Understand that. There's no specific rule to this that you must follow for when you should take profits. What we've identified is a way to take profits at good areas that would, over time, by compounding win after win after win after win, by using a 2-to-1, you would always get 2 points for a winner and 1 loss for a loser. So this is why we do it. In this case, the price decides to work its way down, definitely hits your target and continues to go down. All right. So this is why I personally, when I take these trades, because I'm a little bit more of an advanced trader, I would take profits over here, but I wouldn't fully close my trade because I have multiple trades open. I'm not taking one trade, and I'm not really looking to necessarily just get in and out as fast as I can. I have that as one of my tactics. But for the most part, what I like to do is take profits on the way down. And then if I see that the price is becoming weaker and weaker, I even add to my position. So I could have an entry over here if I feel confident. But let's just say that in this case, you did take this trade, okay? And your trade was hit right over here. Your portfolio is now grown, and that's all that matters. Another reason why you don't want to hold on to this trade forever and hope to get all the way down here and not take any profits is because if you even moved your stop loss slightly in profit, a wick like this would take you out. Another little bonus here, whoever's watching this, hopefully this would be helpful to you. When you see something like this and then you see a retest of a significant area, this high area, typically you can expect that was the last time. Typically, I'm not saying this happens every time, but typically you can expect that was the last hardest push they could do to hit all the stop losses before the price drops much further, and you could see it came all the way down to here. You can look for this pattern time and time again. Once you look past price action, identify a high, identify a low, create a range, and you'll notice that a lot of times these nasty wicks, especially on altcoins, will definitely hit all the stop losses and followed by 2 more waves of downside. It's not a guarantee. I'm just sharing with you based on experience what I've noticed time and again. So what we've got here now is we've got our stop loss, we got our entry, the price is now moved in our favor. Let's say that you want it to be much more aggressive and you want it to go, for example, for a 4-to-1. Then there's your 4-to-1. Let's say you want it to go for a 6-to-1. There's your 6-to-1. So there's tons of different ways, and you could, again, split your entries up and take multiple trades and do it the way that you wish. Okay, so that's one example of the very first trade in this range that I would have felt comfortable to take. Does not mean that these are not good. Please don't misunderstand. A lot of these are great, but this one was phenomenal. You'd have to agree, because everything worked out in my favor to take this trade. What I'm showing you is you get a signal, you come to your computer or you go to your phone or your tablet and you look to see if there's a good trade setup here or not. This case was a phenomenal trade setup. So the next area, the next time we get a signal, let's look and see. We didn't get any long setups here. We're back up here into this zone. We've done a full rotation. So typically, 2 full rotations, when you see something like this, you kind of have to watch. You can't just jump into an entry. You got to watch and see what happens. You definitely want to lose this area at the bare minimum. You want to lose this resistance area. So I mean, come back down, acceptance back into this, in the center of this area. So this is the top, this is the bottom. Get back inside of here before you would take a short. Of course, you would be looking for an Oracle signal. This is what we're talking about right now. Oracle, there is no Oracle print here. The price continues to the upside. This over here could be an amazing trade, and it did probably go in our favor, but you would have to then find a range. And in this particular case, because the price is now broken out of a previous range, we don't really have a range here. So what you could do is you could actually go down and look at these 2 indicators to give you an idea if this is a good range or not. So this is the beautiful thing about what we got here, is Oracle telling you to take a trade. As a day trader or someone that has some experience trading, you look for identifying tops and bottoms, support and resistance. Once you've identified that, your trading can be amazing, because then you would combine everything, the Oracle, the top and the bottom, the support and the resistance, and then you would look at your oscillators down here, which are Morpheus and Dozer. However, if you don't have a resistance and a support, let's say you get this trigger, you get this alert on your phone or on your tablet or on your desktop. This is what it looks like, okay? You've broken out higher highs, higher lows. Market structure is slightly going bearish now over here. Again, 24-minute market structure is only relevant for 24-minute time frame. This does not mean that the price would drop from here to $5. This is only relevant in a low time frame. So yes, the structure for this pattern was breaking to the downside, the lower high, right? Lower low, and we're continued down. So you get this signal. Next thing, the only thing that you have at that point, unless you've got other things marked out on your chart, is actually your oscillators. So does the oscillator favor this short? That's the question you need to ask yourself. Personally, I would not take this short. The reason I wouldn't take it when this print comes in is because money flow is going down. We do have a trigger wave, but the problem I have is that the price is already moved to the bottom. Typically, remember, down here is where we're going to get like an equilibrium. The momentum will go back up. I've also got Dozer all the way down here. If it was up here or about to cross, or if this was up here and about to cross, then I would definitely be more willing to take this trade. So in this case, even though this worked out, this is not a trade that I would like to take. It would be risky for me to take. I got no support, no resistance. And if I end up taking an entry, let's say right on this candle close, you can now see how far of a retrace, 2.5 before it went down. So that, if you're using high leverage, that's pretty aggressive. Now, was it a bad trade? It wasn't a bad trade, because look, if you just put your entry anywhere in that candle, so we'll just say you actually ended up getting it in the center of that candle, and you put your stop loss above the high, which the price never got to, you could ride that down and take almost 3%. It wasn't necessarily a good trade, it just worked out. And that is not how I trade. I'm not here to just try things and hope it works out for me. I'm here to do the most technical things that will give me the most maximum possibility of a gain. So we'll come back up to the top here. Again, we've been going up, 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 up. You get a long print. Let's look at, we don't have any reason to assume that the price is going to go up here because we were at the top. We've kind of put bearish market structure started to form. All right. And we, again, look at our indicators. In this case, the green is actually above the other side. So right away, this is an X for me. One negative reason to not take this trade. We are at the high. We've been pumping for quite some time. We're at the high. Again, a reason not to take a long. Let's look at Dozer. Dozer is at the top, but it's been moving sideways. Money flow is sort of moving up. Do I have a trigger wave? No, I don't. I don't have a trigger wave either. This can't be a trigger wave for me. This is a trigger wave, but that's not a trigger wave. So when I look at this whole thing, I don't like the way that this looks. And you can see again, if you look at the retrace, 2.5 retrace, and then yes, it did go in our favor, 2%. The 2-to-1 trade setup wouldn't have been there because your low would have been down here. This is where you would have had to put a stop loss and you're looking for a 2-to-1. That would mean you would have to pay yourself way earlier than to 2-to-1, followed by this massive drop, which would have certainly hit your stop loss because A, it takes out these lows and it comes all the way back down. So you can clearly see, and this is just one example. We cover more examples inside of the VIP group. The details for that is in the description of this video. You can go to vmctraders.com, work your way into our group in the free area, and then if you're liking what you see, then you're definitely welcome to join us and get access to all of these premium indicators. We do a lot of other coins there. Again, you know, you just keep looking and say to yourself, like, there's a short setup. We're sort of at the top. How come we didn't take this one? Again, look at the reason that we didn't take it. I mean, this is why Morpheus to me is one of the greatest indicators, because ever since I started to use Morpheus, I never stopped using Morpheus. If Morpheus wasn't good, I would have abandoned Morpheus by now. But right over here, this is a phenomenal example of why this indicator is so good, Morpheus specifically. The money flow is thinning out to the upside, so the red, what we're looking for is this red right here. The price is actually working its way from this high to this peak. It's actually coming back into the asset. This is a green dot, okay? We're getting a green dot coming next. The wave is low and it's on the opposite side. It's not here. I'm going to short up here and I'm going to long down here. That's where I get this print. So immediately, that to me is not a good signal. Now, you can argue with me about how Oracle is inaccurate, but I can show you example after example of how it's not inaccurate. Oracle works fantastic. I've got strategies in the group that you could use that will help you. You combine it with Dozer, Morpheus, and Oracle. And very basic support and resistance levels. It doesn't take a lot to understand that. Look right here, this area. The more taps and rejections off an area, that becomes a resistance. So this again, to show you that exact example again, there's your resistance, okay? And down here would have been the support, but unfortunately the price broke through that, but then you could see it retested it and went up. So you got a little bit of a range. If you're down here, you definitely don't want to be taking a short. If you're up here, you definitely don't want to be taking a long. From here you take longs, from here you take shorts. That's just basic. Honestly, you can go on and find that on investopedia.com. There's tons of resources out there that will show you how to draw basic support and resistance areas. On top of that, what we have is these tools to show us if those support and resistance areas are good or not. In this case, this was a support area. You're not going to short here. Oracle told you not to. Dozer told you not to. But I have this as one a potential check mark as a good trade setup. I got Morpheus telling me that, you know, the money flow saying no. I've got a momentum wave on this side, which needs to be on the opposite side. That's telling me no. I don't really have a trigger wave anywhere, okay? And I'm at support. Way more X's than check boxes. That's what Confluence is. So the Confluence in this area was not in my favor to take this short. Therefore, I would not have taken that short. So that sort of more or less wraps up this video. It's not meant to be a very long video. and it's not meant to go look at 100 coins together to identify which coins were good and which coins were bad. But it's more for you to wrap your head around the idea of how everything works together in conjunction. In the first video, we identified some coins by randomly taking those coins, for example, LTC USDT. There's an example. I'll just walk you through it very quickly as a recap and just look at it and say, is this a good coin overall to take into consideration and set up alerts for or not? That's what you want to look at. So here you got a bunch of longs which ended up taking this move. You got a couple of longs here that weren't very good, but then this one went in our favor. This one here would have probably got stopped out. This was a great long. This was not so much, not so much, not so much. Yes, no, no, yes, yes. So you see quickly, yes. Now you can see how many yeses we're getting over and over again. Each of these is a good trade. No, yes, because the price came down to here. So I've identified this is a fantastic one. So LTC is good. So on the 24-minute, then I create an alert for it. All this is covered in part 1. Right click, go over here, set your alert. And once you set your alert, you just wait for the alert to go off. Now that the alert goes off, you come over here, for example, you look at your Morpheus, you look at your Dozer, you look for your support and resistance areas. Okay, this area here has found a lot of bounces. There's your support. All right, and up here is your resistance. And in this particular case, money flow is curving, coming back in. You've got a trigger wave here. It's on this side. Got a double bottom on Dozer moving to the upside. If you look at this point and this point, this is going up while the price action is going down. Same thing over here. This is going down. No, actually not over here. Yeah, right over here between this point and this point. So this point and this point are both going down. This is going lower while momentum is going up. So you've got a divergence building up here. You've got a beautiful long. You've got a perfect invalidation. What I mean by that exactly is you put your entry. Let's just say you get in at the center of that candle. You put your stop loss below the wick, right? There it is. And you're looking for just a 2-to-1, right? That's your bare minimum goal, 2-to-1. And there it is, hit right here. And obviously a full rotation in this case happened for 13, 14, 15%. The point is that that's all it is. It's combining several things based on price action, Morpheus, which is an oscillator which has several things happening inside of it, and Dozer to make the best trading decisions and to compound win after win after win, and ultimately get to a place where you have way more winners than losers. I hope these videos have helped you. Part 1 and part 2 are available on the channel. Please watch them. It should take you an hour at most. You can learn things even if you're not a VIP member, just based on support resistance, how Morpheus works. You can learn things, and if you decide, then you can become a VIP member. Again, all the details for that is in the description below. Thank you for watching. Please like and subscribe. More videos coming soon. Thank you for all your support. And once I get to 1,000 subscribers, it's a big accomplishment for me personally. Therefore, I will gift a lifetime membership to one lucky person. Thank you for all your support, and we'll see you in the next video. Bye for now.